in my mind, which is why I don't feel that Gen AI is going to fundamentally change the world of credit decisioning and so on that much in the near term, because I mean the use case is more limited there. Where I think Gen AI can have more value is in both the customer service as well as as well as more customizable experiences for individuals at its most glorified, an AI personal assistant for your finances, right? That's those are the realms of possibility, and that's where I think the value from Gen AI will come.
Hi, friends, and welcome to Leading with Data, a podcast where we have deep conversations with leaders in AI and ML and bring those learnings for you. Today, I have with me Jaidev Janardhan, who is currently the CEO of Zopa Bank. Zopa Bank is a neobank based out of UK with a lending book of more than 10 billion pounds and having customer deposits of more than 4 billion pounds. Zopa Bank currently serves more than 1.2 million customers as of this recording. Jaidev joined Zopa, the world's first peer-to-peer lending service at that time, as its COO in 2014. Prior to that, he was the CMO and vice president at Capital One. So Jaidev joined Capital One in 2002 in its US office in McLean. And after working for 5 years in the US credit card business, he transitioned to the UK in December 2007 as a chief credit officer for the UK business. That is where I met Jaidev, and we worked together for about 2.5 years. And he has always been regarded as one of the sharpest analytical leaders with extremely clear communications. In this conversation with Jaidev, I talk about his journey in building Zopa Bank and his thoughts about how generative AI would change the fintech space, not only in UK, but across the globe. So enjoy this conversation.
Thank you, and thank you for that slightly embarrassing introduction. I'll hope to keep up to it.
No problem. Great. So, Jaidev, would want to start with, what were your early days like? So you passed out of Bangalore in 2002, and somewhere I read that you also wanted to become a cricketer or a sports commentator. So how was your journey into, analytics and this digital world of banking?
I mean, I grew up in India. My kind of mother was a nurse in the army. My father worked in the government. We were kind of moved around lots of parts of India. So I would say kind of a regular middle class upbringing, and with that, growing up in India, watching some cricket on Doordarshan was part of the upbringing, and that and I, as with a lot of boys in India, really wanted to play cricket. Tried my hand at it for some time. Never quite got very good at it. I still play a little bit and live off my kids' cricket vicariously a bit as well. But so cricket was a big
Mhm.
obsession. Actually, in general, watching sports was a big obsession. Never really thought about banking. Uh, Again, when you grow up, the banks in India, you see your SBI and so on. It's not one of those places you want to kind of okay into. Did my engineering for a bit, worked for a telco around the time cell phones were being rolled out in India, and didn't quite find that my cup of tea, and that's went to business school. And again, as most people go into business school, you then want to be a consultant or investment banker. The interview process made it very clear that probably investment banking was not for me. And
Mhm.
I graduated in 2002, which is just after the kind of dot com bubble. So there weren't that many consulting jobs around, and I just found myself in Capital One, not knowing what a credit card company was, what really was, and that was really how I got into banking as itself, and specifically analytical led banking. And it was I didn't know that at that time, but it was definitively a great fit for me. So it was very accidental that I found it there, but I have been in kind of really enamored, and really find that very challenging even today to be in retail banking, to look at the best in analytics and the best in technology to be able to kind of make changes. So yeah, that was my somewhat accidental journey into banking, where I have been since now for almost 22 years.
Right. And part of this was so you spent first 5 years in US and then in UK. And within Capital One also you took like a variety of roles.
Yeah.
I remember you were chief risk officer when I left Capital One. So how was that, or what impact did Capital One have on you as a person and as a professional? And then, your switch to Zopa, and then, how is Zopa set up? A bit about that.
Yeah. So I would say, Capital One definitively was, from a financial services standpoint, really kind of a great place to start. It's a culture which was very data led, analytically based, but also one that was truth seeking. I think really helped us set a good foundation for how to think about problems in the world of financial services, and how to apply data in a way that we can find better solutions for customers. And I think it was a great school for not just for me, but but I think a lot of people who went through that during that time. And I was particularly fortunate at Capital One to be able to do a variety of things. I started with kind of product and customer lifetime valuations. Spent, as you correctly said, in 2000 through the financial crisis, actually managing credit risk for the UK business, being a chief credit officer here. Then actually did operations and fraud. So really helped give me a broad range for of experiences, which I thought was incredibly relevant and set me up well for something at Zopa. And what I've tried to do at Zopa is, of course, do everything I had learned and kind of build on that. And I think some of the things I think we have done at Zopa, I think there's some credit goes to what we learned at Capital One, but where I think we have done things differently is by being even more customer led, in particularly in terms of experiences and design, but also by owning our own technology, being kind of far closer in terms of the digital innovation that you can bring to the market, and be faster and more nimble than probably a bigger bank can be, right? So that's where I think we've been able to kind of step forward from at least what I had learned at Capital.
And Zopa, when it started, was a peer-to-peer lending platform, right? So, from again a data perspective, were there any different set of choices compared to, let's say, what we used to make at Capital One? So, in terms of, let's say, risk bureau data, or were there any fundamental differences in the way you would look at peer-to-peer lending versus lending from a bank's perspective?
I mean, yes and no. I think that the choice that we were a peer-to-peer lender did not drive any different choices. The fact that, because uh, again, Zopa was always it had always owned the whole credit risk and underwriting process, and never let any of the investors, so to speak, pick and choose which loans they wanted, be that a retail person or an institutional investor.
Mm-hmm.
They always got what they got out of the kind of the underwriting process that we ran. They had choices kind of about risk, how much risk you wanted to take, but there was never individual level choices. So in that sense, it wasn't very different. Uh, of course, there's a difference between Capital One's business predominantly is credit cards, which is slightly different product with a lot richer performance data that you can use, versus at that time Zopa was only doing personal loans, which has which is a different thing. But otherwise, there was no difference. Of course, and the other advantage that Zopa had, which a lot of people didn't have, is even when I joined, which was in 2014, it had 9 years of data. And that was one of the things that attracted me to it, is because I felt there is enough data to be actually be able to build a data-led strategy here, rather than having to start from scratch with testing and so on and so forth.
Interesting. And very interesting that you mentioned that even if I'm lending my money, I have to just take what Zopa is offering as opposed to making my loans, which
Yeah,
you would usually think is not how people would think about peer to peer lending, right? Usually,
yeah.
the platforms around would give me a choice that whether I want to lend to a person or not. So was this a specific design decision in the product,
Yes.
and were
Yeah.
there any pros and cons?
I think there were two specific reasons for that decision, right? So one, as a borrower, we wanted to make sure that we gave a consistent experience and we treated them fairly. So, in that sense, just because their loan was allocated to a certain lender should not mean that they should be given a yes or a no. The yes or no should be based on their thinking. So, I think from a customer outcome and treating customer fairly from borrower standpoint, that was important. Similarly, as a peer-to-peer lender, we always had a very rich retail kind of lending business where lots of people were putting in their money. It would have been unfair for those individuals then to have to almost compete with big institutions who would have far more sophisticated ability to kind of understand credit and then kind of try and pick the best loans. That would not have led to great outcomes for individual investors as well, and also would have created what I would consider kind of a conflicting or a competing thing for the borrower, for the lenders or the investors in the loans. So we felt as an ecosystem it was far better and fairer if we as a as a third party who has both the borrower and the lender interest in heart make those choices, and the lenders are then kind of get what they want. So the pros were, I think, we avoided conflict in the system. We avoided any concerns around bias one way or the other. The cons were that it always took us longer to attract investors because they felt they had to kind of completely trust us, and particularly for the institutional investors, they had to do a reasonable degree of due diligence before they agreed to lend hundreds of millions of pounds on the platform. So yeah.
Interesting. And from a lender and borrower perspective on the platform, uh, it puts the overall operations to be very similar to, let's say, a full-fledged bank, right? So, I
Indeed,
mean, now
indeed,
you would
yeah. So
need all the data points. So,
yeah.
then, was it not losing this point of peer-to-peer lending, or again, there was that was a choice which you made?
So if I look at my kind of, when I think about my time at Zopa, I always kind of define it in three, and now probably the start of the fourth phase. I joined in 2014, and the first couple of years, we were really focused on building what I would think is a great lending business. We were one of the first adopters of AI to use credit decisioning, kind of made that entirely automated, and really were able to create a customer proposition in the UK, which was almost unique then, that as a customer, you would know whether you will get approved or not and what your actual price that your loan is going to get almost instantaneously. Those times it used to take us about 35 to 40 seconds. Now we take less than 5 seconds for that information. And that proposition was very attractive for borrowers, but also led to much more consistent decision making. As which was also then a lender could look at the decision making and know that there is it is pretty consistent, and that led a uh, quite a bit of growth. We grew revenue about 6 to 7 fold in 2 years. Uh, so now I'm in 2016, but that's when, as a business, a lot of us, felt that there were some limitations and some weaknesses to the peer-to-peer business model, which is what led us into launching the bank. When we launched, and we applied for a kind of a banking license in 2016. Late, actually, no, we started the process in late 2016. November 2016 was the first meeting we had with the regulators. It took us about 3.5 years to actually get that license, which was kind of what I think of as phase two, where we were building out the other products and going into kind of broader borrowing and savings offerings. And at that time, our intention was always to run the peer-to-peer business almost side by side to the bank. Um, a variety of things happened through that time. COVID. So we launched the bank actually in the midst of the first lockdown here, June of 2020. So what weird times. But COVID meant that a lot of borrower lenders had bad experiences, not with our platform, but with other platforms. Our platform actually they had a very good experience, positive earnings throughout, no concerns of liquidity and so on. But other platforms didn't deliver similar results, and as a result, what we saw was both a tightening of regulatory standards across the board, as well as probably some fear from investors and lenders about peer-to-peer. So that's what made us choose to actually wind down the platform in 21, and now we are a digital bank. So today we are a digital bank that focuses on kind of borrowing and savings. We've got about 1.2 million customers, kind of more than £4.5 billion in deposits, which is how we get our funding through a variety of savings products, and then we lend across personal loans, credit cards, car finance, BNPL, or point of sale. So having a bank really allowed us to have that much greater variety of products, which has been very helpful for the bank. And today, we find us. I find think that we are in the start of a fourth phase of our journey, where we are going beyond borrowing and savings and into current accounts, or what would be called checking accounts in the US. And I think India calls it current accounts as well. So kind of being into from just from borrowing and savings to everyday banking is our next step. And we think the peer to peer, you know, legacy was really helpful in accelerating uh, the growth of that bank. But over a period of time, it just became a not a very attractive business to be in, and thus we kind of wound that down.
Interesting. And during this period, one you mentioned specifically that you were the first one to kind of use AI to automate the entire credit decision making. What were the other areas where you were kind of very heavily reliant on data and AI for building for
Yeah.
different phases, which you mentioned?
So, if I kind of step back, I would say when we think about our strategy and how do we differentiate in the market, we try to understand kind of the real unmet customer needs. So not just experience, and is an important thing, but we what we want to do is give. We think for a customer really to fall in love with the financial product that they have, they both need ease of use. It's a great experience, which is what a lot of neobanks have focused on, but also value, right? So you need to feel that you're getting a good rate for borrowing, a good rate on your savings, and so on. So providing ease and value together has been the core part of our focus, and we think the best way to achieve that is to use data and technology to its foremost, because that allows from an experience standpoint, far more instantaneous kind of experiences, and the customer feels in control because they can drive when they want something or not. It also drives much lower operating costs, so far more efficient, which means we can actually give value to our customers, right? So that's why I think using data and technology has been an important part of how we deliver that kind of ease and value. So if I specifically think about data, we have used AI in credit decisioning since 2015. So it's been 9 years where we've had very predictable loss outcomes. And over a period of time, when we first launched as I said, our products, we were about 70% fully automated, and used to take about 35 seconds. Now we are 100% automated, and takes us less than 5 seconds to actually do that. And it's a virtuous cycle, as in the sense that the more data we get, those models get kind of better and better. We of course use it for pricing, so understand, and because we are offering actually more than few million kind of pricing quotes every month, and getting the real time feedback from customers whether they're taking us or not, or choosing to use another provider, gives us great insight on price sensitivity and so on and so forth. So we again use pricing for pricing optimization. AI is used. Fraud clearly is a place where both from a specifically from an identity fraud standpoint, account takeover concerns, vulnerabilities, understanding that. So that's another huge area where we use AI. And lastly, customer servicing, where we are, today we use about, I think about 20 to 25% of our kind of customer servicing contact. If customer contact is low to start with, because there's a lot of digital self-serve, but about 20 to 25% of our contact is done through chat and chat bots, specifically, which is again use of AI, and that's where we think in the future generative AI can play a bigger role. So hopefully
Great.
that answers
In
your
fact,
question.
just it does, it does.
Sorry.
But just double clicking on the generative AI part, and also before that. So uh, as a bank, the reliance on more, let's say, so to speak, transparent machine learning models is usually a lot more than, let's say, some of the other industries.
Yeah.
Within Zopa, how would you compare that, and specifically, let's say, use of deep learning based technologies, or more so as to speak, the new age AI or Gen AI capabilities. So, can you elaborate a bit more on that? And then, what role are you seeing Gen AI to play in coming years?
Let me answer your first question. I think we are lucky in the UK that the regulatory outlook is, I would say, fairly mature towards the use of AI, right? So from their standpoint, the way I think I understand it is, we need to be incredibly focused on customer outcomes, right? So the outcomes that we deliver to our customers need to be one that we can stand behind and should not be using kind of any prohibitive characteristics, which is about kind of bias and discrimination. So that's an important thing to note. The second thing to for us to note from a safety and soundness standpoint is that these things work and can be seen to be working over a kind of a long period of time. Though, uh, and those are the outcome-based considerations that our regulators have, and it's incredibly important for us to kind of deliver good customer outcomes and kind of stable performance. And then from a data standpoint, it's important that the customers understand, give us consent to use their data, and that we are using data that we feel is appropriate for the uh, for this case we are doing. So what we have done, so we've had a number of conversations with both the prudential regulator here called the PRA, which looks at safety and soundness, as well as the consumer regulator, the FCA, around this. And what we, I think what they take satisfaction from is the variables that we let into the model are kind of good and appropriate for credit decisioning. So, for example, we shy away from any social data. We don't think that's appropriate to use, and are largely focusing on credit bureau based data, financial assets, financial income based data, employment history. Things that are really focusing on your financials rather than anything else to avoid that potential for discrimination. And then we actually measure both the model performance, both in and kind of out of period when you build it, but also over a period of time. But also individual customer outcomes, saying, what is the pricing that we are delivering to these customers? Is that consistent with the rest of the market? What are the default experiences and how we're dealing with that? So I think it's through that where we have focused on the thing, rather than, ultimately, to your point, if it's a gradient boosted model or a deep learning based model, it's going to be incredibly hard to explain the model in the sense of exactly how it can work. We do have some good techniques in terms of being able to describe the individual power each variable brings into the model and why do we think that variable is appropriate to use. We have those descriptive stats that we often use, but that's the way we have actually met that. And I think we think as a regulator, that's the right, we believe that that's the right approach to take, which is really focus on the customer outcomes and the outcomes from a safety and soundness standpoint and ensuring that the variables are right. So hopefully that answers the question on that.
Yeah, it does. It does. And then,
In terms of Gen
with
AI,
Gen AI, how does that? Yeah.
it changes a lot, right? So the problems with Gen AI, first of all, there is a privacy concern. So, but I think that's increasingly being solved by having kind of enterprise grade software that where you can make sure that your data is not being trained. So we use some of that. But the second one, which is not as happily concerned, is the fact that is that predictability and repeatability of outcomes, which is still a question mark. Uh, So, in my mind, which is why I don't feel that Gen AI is going to fundamentally change the world of credit decisioning and so on that much in the near term, because I mean, the use case is more limited there. Where I think Gen AI can have more value is in both the customer service as well as as well as more customizable experiences for individuals at its most glorified, an AI personal assistant for your finances, right? Those are the realms of possibility, and that's where I think the value from Gen AI will come. Uh, Probably, still a couple of years away to make that a reality, but in the near term, our focus in Gen AI has been twofold. One, improving the efficiency of people working there. So, for example, our developers use GitHub Copilot. I think there are tens of thousands of lines of code that are now in our system, which was originally created by the Copilot. Uh, a lot of our employees use Copilot on Office to kind of make make their day-to-day work more efficient. And secondly, the way we're using it is on from a customer-facing standpoint is to create first responses, which then a human chooses to either use, edit, or discard for for customer queries that come. As that performance improves over a period of time, I'm sure there is a way for us to kind of make that more real.
We are now about 45 days from Data Hack Summit, our flagship event in Bangalore happening from 7th to 10th of August 2024. And I could not be more excited about what we are building. With more than 70 sessions and 100 speakers at the event, you will experience how generative AI is setting the new world order. The summit consists of several keynotes, power talks, Gen AI hack sessions, several panel discussions, and day long workshops from industry leaders and the best data scientists out there. Tickets to some of these workshops are already sold out, and others are selling fast. If you are an AI professional who can be in Bangalore at that time, you should not miss this chance. And now back to the podcast. So, just stepping back a bit and talking about the overall fintech industry and use of Gen AI in this industry over, let's say, next few years. So how do you think about it? And then this idea about financial assistant sitting with every person. Do you see that, let's say, a new startup coming and disrupting this phase, or do you see each bank or fintech player kind of building their own assistants which are sitting in the app itself, or so essentially, how do you see, let's say, next few years panning out?
Yeah, so I think let me take the first question was in general. So I mean, I still believe that fintech, what has been around in its current avatar for I don't know, maybe 15, 20 years, is still very much in its early stages. I think I was reading I think it was an Oliver Wyman study which said that today fintechs have about 3 or 4% of the overall profit pool of the market, but you can see places like in the UK, LATAM, where increasingly fintechs are taking larger, greater and greater shares. So I think we are in the start of the journey, and I feel that over the next 10 years or so, you will, some fintechs or fintechs getting together will create the new sets of kind of incumbents in financial services. In the UK, that would be kind of replacing the likes of Barclays or Santander or whatever. And in India, that might be replacing HDFC or ICICI or SBI, right? So I do see that that's very likely, and there'll be at least you know couple of incumbents in every market where they were born in this in the early 2000s, early noughties to in the or past to 2010, actually taking that space. Going specifically to the Gen AI point, I think it's fascinating. I can see one of three things happening. I can't see the incumbents creating some, or many of the incumbents creating something that's going to be game changing. So they will always be a follower, fast or slow, depending on their capabilities. That would be my guess. Um, so the thing becomes about startups coming in and disrupting the thing. That is very possible. I think the move to mobile created some of the big kind of banks, bigger of the new banks, created that they were the first ones to adopt that, and there is a possibility that you can have someone who adopts this and moves there. The second possibility is that the neobanks themselves are able to kind of create something that is more compelling. That would be the one I would hope for will happen because we are investing heavily in that. Um, Third possibility is kind of big tech effectively takes this as an option or as an opportunity for them to say, if you think about it, why do you need an app? You can imagine a world where, just like we have just taken the Google search bar, as soon as I just go into my phone, I just say, do this, and the LLM sitting behind the phone figures out which app or thing that needs to be opened and what needs to happen in it, right? So you can easily imagine whether the whole app becomes a thing of the past and all you have is a conversational interface, be that you're talking to it or just typing it in, interface on your phone, and that's what is happening. I find that very possible. The third one, because about the level of investment in fintech. So those are the possibilities, and I think those will come mostly actually true in the next 5 to 6 years, maybe less.
Yeah, no, that is true. And then, uh, yeah, it might be actually a mix of probably two and three, or one, two, and three, which might
Exactly. Yeah.
end up
Which could happen.
being
Yeah. Yeah. Yeah.
great. And from let's say, people who are now entering their career journey, so let's say relatively early in their career, uh, either completed their education, etc., and they are entering, how would you recommend them to think about their careers? So, should they focus more on uh, technology or problem solving, or I mean, should they kind of build tech debt first, or how are you? What would be your recommendations?
I mean, I think it's an exciting time to change to start your career. I think the world of data and technology continues to expand. So when I was younger, and that seemed like a long time ago, mostly it was kind of financial services firms that would have very heavy kind of data use. Within 2 to 3 years or 5 years after that, you started having the retail sector doing that a lot more. Then they moved towards digitization, meant there's a huge era, be that you're watching movies, whatever, there is data and tech to be used. Particularly the start of e-commerce meant that the use of data became far more widespread across a variety of things. And more recently, you're seeing data AI being used in finding cancer cures, uh, kind of genome tracing, and figuring out how to think about that differently. New protein discovery, so many things, right? So I feel getting a good grounding on how do you use data and how do you use technology to kind of solve that, to solve a variety of problems will make you very well versed and versatile in terms of whatever the world has to offer. So definitively, that's important, and that is really and the actual technology, the actual programming language that you use is likely to change, right? We grew up with Excel, SQL. Now, nobody uses either of them, and most models are built in Python. And I don't know what next is going to happen. So the actual specific tool is probably a lot less important than understanding how they work. When people talk about machine learning, how does it work? Uh, what is the math behind it? How do you do basic algorithm writing that is efficient? Those are important things to learn, but that in itself doesn't solve it. And I see this a lot in a lot of people, particularly younger graduates coming in, where we would be talking about a problem, and immediately they would have gone and done 2 to 3 weeks of some very complex tools and techniques and stuff like that. And I sit back and say, but what was the problem you're going to solve? You were looking at answering this one question. If you were very clearly defined on that question, you didn't need to. You could have just created maybe one simple data query and split the data in two ways, and you would have got a good answer. You didn't need to do this 3 weeks of thing. Right? So I do feel being investing in understanding problem structuring first is incredibly important, rather than being enamored by tools. So if I had to summarize, I think if you're building a career in data and database tech today is amazing. It'll give you a huge set of opportunities. Don't focus on the tools as much, or mastering the tools, because the tools will change. Understand the underlying math, uh, but that in itself is not going to be enough if you don't understand what is the problem you're trying to solve, and answering that and having that definition incredibly easily defined early.
Great. And so in some sense, build depth in data and technologies, and then then probably look for bread by looking at more and more problems.
Yeah, and then you can find your passion on where you want to kind of apply that, because some people might be interested in financial services, some people might say no, I want something real, not as abstract as money, and that's up to you, because but it's a whole thing that can be defined everywhere. But bring clarity of thought. Clarity of thought is incredibly important.
Interesting. Uh, and in your experience, any particular application of Gen AI, either in fintech or otherwise in general, which has kind of surprised you, or was there a aha moment for you when you got exposed to Gen AI?
My aha moment was, I think this was, I don't know, maybe a year ago, maybe a bit longer than that, but was my older son kind of showing me that how he had been playing around with with ChatGPT and had written a poem about something, or asked it to write a poem about something, and how how good the poem was. And I'm like, oh, uh, both the fact that you had someone that young actually playing with it, but b the outputs. Uh, was something that made me sit up and notice that this is going to be real, and this is going to be very impactful. And as with as like with the internet, it took us time to figure out exactly how to make it work, and make it commercially viable. I see the same thing, that I think the killer commercial solutions are still not there, but I think but it's only a matter of time.
Interesting. And from a leadership perspective, Jitesh, one of the things which I briefly alluded before as well, that you know you have always been phenomenally clear about your communications, thought process, decision making. Uh, is that something which you developed over time? Is that something which you which is like your personality from early days? So as a leader, how has that grown in your leadership style?
Thank you for the compliment. I'm not sure how deserved that is, but yeah, I have tried to always be kind of bring clarity to my own thought. I think that is an important thing as you start on a journey or a project or a problem. Being, taking the discipline of being clearer about what is it that you're optimizing for, what are your constraints, and what are your degrees of freedom. Knowing that early enough is an incredibly important part of finding the right solution, and that's something that I don't know, maybe it was taught to me very early or came naturally to me. I think where, as a leadership thing, I feel that, through a lot of support and variety of experiences, I have changed is being one, making the point of describing that and saying that, and trying to communicate that clearly many times, so that people get a sense of why I'm asking someone to do something, or why I'm taking a certain decision. I think it's incredibly important to actually describe that more times than you think is necessary. And even if you think it's very obvious to you, the context you might have is different from the context others might have. And thus, saying it out loud is helpful. Not just helpful because then people understand why you're doing, but it's also helpful because if you have the right team, if there is a flaw in that, if there's a bit of context that you're missing that might change your decision, then you get to hear that, because saying, oh, this is why you're saying that, then, and that again creates better decisions, because you get that feedback that there was this gap in my thinking or gap in my knowledge that then should lead to a different decision. So I think communicating that more clearly and outwardly and more often is something that I've learned. The other thing which I think which uh, I think my first step of realization, this was in Capital One towards back end of my time, but more importantly at Zopa, is a larger part of leadership is actually sharing your desires, what you want to achieve, rather than the how you want to achieve it. Because if you have good people, they will figure it out. But describing your motivations, what gets you excited, what are we trying to do together, and building that common sense of purpose is probably even more important than explaining their decision making. Because I feel that if if you have smart people who all share that purpose, then you probably have to do a lot less.
Sure. Over communicating and then communicating why very clearly for the key priorities.
Yeah. Why, and in particularly, why not just your rational motivations, but your emotional motivations? Where you come from, and what your what actually makes you happy. And because a lot of what we bring to work, the choices we make, are about, of course, the business problem you're trying to solve, and so on and so on, but are also about your own personal motivations in terms of what kind of uh, what kind of customer outcomes you want to deliver, what kind of culture you want to create. Those are less rational; they are more emotional.
And any particular, anecdote or story or example which you uh, uh, can share, which highlights this point?
Yeah, I can maybe two or three. Let me pick one. I mean, this was when I was at Capital One. I had a you might remember him. I had a boss called Alihan Hotic,
Yeah,
and I think this was, I mean, I was 8 or 9 years into my career, and we were having dinner in a Nottingham restaurant, and he said, you know, one of your strengths is, this is what he's telling me, that is that you're relatively unflappable. You come up with a rational, logical thing, but the problem is I just never know who the person is, and what does he get angry about, what does he get happy about, right? So thus I never feel that I can actually really connect with you. All I see is this very rational person, right? And he said that as a boss, I'm very kind of happy about that, because I know exactly, what you're saying and why you're saying it. But if I were in your team, I would struggle with that, because I would never be able to really connect with you and form that bond. So that was, I thought, a very helpful thing, because up until then I had almost made it a point that said, leave emotion out. Work is about rationality. Work is about logical decision making, and that's what I would do. And that probably started my journey of just kind of sharing a bit more about the emotion that is inside. But then when I came into Zopa, I think it became both in some ways easier, because you have a lot more say in what is happening, and it impacts you probably a bit more. But it also became a lot more important, particularly as we were going from the transformation from being a peer-to-peer business to a bank, was an important shift in the organization. It was an important shift for the organization, because the initial ethos of Zopa was really about, we are not a bank. In fact, I have a T-shirt that says, "What is a Zopian, not a banker." I still keep it, right? And thus, us going to be a bank was always going to be, uh, I think, was a surprise and shock, and for some people was probably a maybe a betrayal of our roots, so to speak. So being clearer about, why are we doing that, how from a customer standpoint, delivering great outcomes didn't hasn't become any less of a priority. Why being, why for personally for me, actually doing more with the customer rather than just be on their loan provider, was incredibly important, and how by doing that we could have had a better impact on their overall lives, and so on. And why personally for me it was, we had this I had this ambition where I wanted Jova to be a household name, and we're still on that journey. And how by staying only with peer-to-peer lender, we were going to limit our aspirations. Those are the kind of things that I think help people make that shift. And if I had led that purely rationally, I don't think I would have had carried as many people with us as we were able to do, because we were able to be more open about our ambition, aspiration, and kind of desire to do more.
great. No, thanks for sharing that. Very powerful. Uh, Towards the end of each episode, we do a few rapid fire questions with our
Sure.
guests, and the idea is to know you better as a person. So, any particular books which had a huge impact on you, or which you usually share as recommendations?
I don't know. Each time I say it, I come up with different books, right? So, so I
Okay.
would give you. I give you three that I can come to my mind right now. Uh, I think from a general management, leadership, whatever book, the one book that I think I thought it's an incredibly well written book and tells a lot about us as humanity. Is *Sapiens*. It's a book that I've
Okay.
read many times, and one of the things that I think maybe connects back to the earlier question you had is that how human beings, we are all about storytelling and narrative building, and that's an
Yeah.
important part of how we can get together, and that's why sharing the emotional part is important and stories are important. So *Sapiens*, uh, a good one. I'm a big John le Carre fan, and I think maybe Tinker Tailor Soldier Sailor or Soldier Spy is a I think a
Mhm.
beautifully atmospheric book that I really like. And something weird and kind of out there. The book by Cockpit, it's a book called Cockpit. It's by Jerzy Kosinski. It's a series of just weird adventures. So
Okay. Interesting.
it's an adrenaline kind of shot to have to read it.
Great. Great.
Those would be my
Thanks.
book
Uh,
recommendations.
uh, sure. And what does your typical day look like today?
So I got two boys. One's just about to turn 15. The other's just about to turn 11. So young, but still, I mean, but growing up. Typically in the morning, I try to, because I'm at work most of the time, I try to do a little bit with them, cook their breakfast, drop my younger one to school. The older one goes on his own. They get into work. Work's usually about at least a quarter, maybe a third of the days doing something, talking to some externals, be it like this, or investors, board members, those kind of things. uh, Sometime with the team, talking about either them or some problems that they might want to share, feedback they might want to give me. So meet some time with them, either as individuals or as a group, um, looking at then the usual work related stuff around looking at some project which might be stuck or getting updates and so on and so forth. That's, I guess, the the work day. Yeah, and then you're gonna go home and spend some time with the family and go to sleep. That's kind of my typical work day, if you will.
Sure. And any specific, or what does your ideal holiday look like?
I mean, I love to travel. In an ideal holiday, I'd like to get a mix of a bit of rest, uh, some activity, walking up a mountain or something like that, or playing something, some activity, bit of rest, some activity, good wine, good food.
Okay, great. Thanks, Jaidev, for sharing those. And then once again, thank you for taking time out from your schedule. Fascinating discussion, and I'm sure the community would learn a lot from what you shared. So thanks a lot.
Thanks a lot for the opportunity, and hope we'll speak soon again.
Sure, thanks.